Hello, everyone. This is Mike Vinoy with Assure. We have nearly 1,000 people registered for today's event and several hundred people on, but the number's ticking up real fast. So it's the top of the hour, but I am going to give it about one more minute to let more people join, and then we'll get started. Just want to let you know you're in the right place. Thanks. Welcome, everyone. My name is Mike Vinoy with Assure. I want to thank you for joining today's webinar titled COVID-19 Stimulus Package Questions Answered, the CARE Act, PPP, and EIDL loans. So for the past couple of weeks, we've been doing weekly webinars that are more HR-centric, specifically around the Families First Act and what small businesses need to do to either comply or be excluded in work through the legislation. Today we're making a pivot, as most of you guys know, and it's why you're here. Congress passed and the President signed into law a little over a week ago now the new CARES Act that has significant financial impacted benefits for small businesses. And so knowing that Assure is a human capital management company, an HCM company, and thus we've had an HR-centric, payroll-centric view of legislation the last couple of weeks here. We wanted to bring in a partner of ours that is absolute experts in the financial side of this, that is more center towards the CARE Act and specifically the Paycheck Protection Program. So I want to introduce Pinnacle Partners, Pinnacle Financial Partners, a large bank in the Southeast. It's not a commercial for them, but what I would say is they're a top 14 company in the United States to work for. Smart, just really good people. So I want to introduce Lane Rhodes and Brian Manning, who are going to be joining us today. Lane is they're both senior VPs for Pinnacle. Lane specializes in SBA lending, where Brian specializes working directly with small businesses. So they bring a wealth of experience to talk to today's topic. So just to set expectations about what's in and what's not in. Oh, and I'm going to go back. I just think I'm just getting a message about screen share. So I'm Mike Vinoy, Vice President of Marketing at Assure. Lane is SBA lending specialist at Pinnacle Financial, and Brian working special with clients. So I want to make sure I didn't miss your pictures, guys. Thank you. Okay, so what are we going to talk about today? What are we not going to talk about today? So Lane and Brian are both going to tag team these topics. First, they're going to talk about the CARES Act, what it is, the Coronavirus Aid, Relief, and Economic Security Act. Then a topic that I think has been out there for a few weeks, but not probably enough people know about, is the EIDL loans, the Economic Injury Disaster Loans. And then what most people care most about probably today is the Paycheck Protection Program, and then we're going to open up for a Q&A. What's not, we're not talking about COVID-19 best practices for HR. We're not talking about the Families First Act as it impacts CARES directly. We might touch up against that. We're not going to talk specifics around tax deferral. I can tell you that we sit on Assure sits on a consortium with other payroll service providers working directly with Department of Labor and the IRS. And there's a lot of unanswered questions still as it relates to that topic. Look for more information in the coming weeks from us on the tax deferrals. We're also not going to talk about state-specific or region-specific HR laws. And as always, a bit of a safe harbor kind of a statement where we don't represent your legal counsel or your CPA. We're here to share the very best information that we possibly can. and that's our purpose here. So last thing about us, and we'll move on to about Assure, and I'll move on to our presenters. We do have a website published, assuresoftware.com/COVID-19, where parts 1 and 2 of this webinar series, the recorded versions are there for you for free. Just go ahead and click the link and watch, listen on demand, just like the recording of this session will be. And there's also specific DOL guidance to how to follow the Families First Act, payroll and HR best practices, how to disaster-proof your payroll and HR function, and then links to all of the states and all the major municipalities to find out what are the specific requirements, best practices, resources available in your neighborhood. So with that, Lane and Brian, I'm going to give it to you guys to talk through the CARE Act, PPP, and the EIDL loans.
Awesome. Thank you so much, Mike. We appreciate you letting us have a few minutes of your audience's time this afternoon.
Thanks, Mike.
Well, so we are here this week, and I think Brian and I both can attest we are both underwater right now in the Paycheck Protection Loan Program that just rolled out. Last Friday, it went live for kind of regular small business owners, and then on this Friday, the 10th, it's going to roll out for self-employed and contract employees to be able to apply for it. So wanted to just kind of cover a little bit about that program, and then tell you a little bit about the EIDL program as well, and then really kind of get into some specific questions, go a little bit deeper into the Paycheck Protection Program. But the Paycheck Protection Program was part of the CARES Act, and it's providing $350 billion in relief for small businesses that revolves simply around protecting employees' payroll and keeping employees hired while businesses are continuing to having to be shut down due to uncertainty from coronavirus. So we can move through to the next slide. One of the other programs that is available in addition to the Paycheck Protection Program is the EIDL Loan Program, and this program actually rolled out live several weeks ago. And you apply directly with SBA for this program. And just so you guys know, we are still encouraging business owners, even though the Paycheck Protection Program has been rolled out. It is specifically geared around your employees and keeping them paid. And so if you have other expenses that you're still concerned about right now that need to be covered, the EIDL loan is a great option for that. It's loans up to $2 million with a really nice interest rate. So it's 3.75 for small businesses and 2.75 for nonprofits. So nonprofits are eligible to apply as well. And the term can go all the way out to 30 years. And I think that's really important for people to know, because if you're applying for the Paycheck Protection Loan Program and it doesn't get forgiven and it becomes a loan, it's got to be paid back over 2 years, which is a really fast payback period and could be really hard for businesses to handle that short of a repayment period when there's still a lot of uncertainty about your revenues getting back to normal. So that 30-year term on the EIDL loan, I think, is a real key feature of this program, and why you should really look into it if you have expenses other than payroll that you're kind of looking to get covered. If you're applying for a loan over $25,000, you will be asked to provide a business UCC filing. So they'll take collateral and they'll take liens on your business assets and potentially personal assets if you have equity available. But if the loan's under $25,000, they will not be looking for any of this. So it's a real quick process if it's under $25,000. And you apply directly with SBA, and when you go onto their application, they're going to have a box that you can check if you want a $10,000 advance. And these advances were being told, and I haven't had a client that's gotten one yet, but I've been told that they'll go ahead and immediately the Treasury will process a check for you as the business owner for $10,000 without even reviewing the application and going through the full underwriting. They'll go ahead and advance you that $10,000 and then send the loan through full underwriting so that you can get in line to get additional funds if you need them. But that is a key point because it is taking a while. I'm hearing from SBA to get these loans pushed through the system. It can take up to 3 to 4 weeks just to have somebody from SBA contact you after the application goes in. So being able to know you can go ahead and get a quick $10,000 without having to go through the full underwriting process, I think that's a nice key feature of this program as well. So Mike, we can move on to the next slide.
Lane, I would point out also that I've had some clients also apply for the EIDL. They've not received any funding yet. They did also check the $10,000 grant box and have not seen that money yet. But I guess one quick point I was going to make is just some examples of types of businesses that might be interested in the EIDL. I know the clients that I've had are in the restaurant type business where they've had to close, they've had to be closed, and they've got perishable inventory that is no longer any good. And since they've had no revenue coming in, they need a way to be able to buy new inventory once they can open their doors back up again. And so this is a great way for businesses like that need help over and above their payroll to be able to get some capital to go into their business.
Definitely. That's a great point, Brian. We can hit on a few more features of the EIDL and kind of how they differ from the Paycheck Protection loans. These loans are applied for directly with the federal government. So you go through the SBA.gov website and you apply directly through them. There is no cost to apply, and there's also no cost for the Paycheck Protection program. And then you have no obligation to accept the loan if you are approved. If you do happen to use an EIDL loan and you're using part of it for payroll, if you do then apply for the Paycheck Protection Loan Program, that portion of your EIDL that you use for payroll would need to be paid off by your Paycheck Protection loan, just to ensure that your Paycheck Protection loan is still eligible to be forgiven. So that is one thing you need to know if you're going to use the EIDL loan program and utilize the Paycheck Protection program. But I'm hearing, and Brian, I think you're probably hearing the same thing. It was taking people a few weeks ago 2 to 3 hours to apply. The website kept crashing, but SBA has done some major enhancements to it, and I think people are able to apply much faster online right now for this loan program.
Yep, you're right. It was a very cumbersome process, like a lot of this has been in the beginning, but with time, it's smoothing out, and the process is certainly improving.
Good deal. Well, Mike, we can head on to the next slide. So these are just the requirements for applying for that EIDL loan program. So just make sure before you get ready to apply online that you just kind of have all your information together, and that'll definitely help speed up the process. The SBA application will actually be electronic when you log on to the SBA.gov website, and so you don't really need to worry about having that prepared ahead of time unless you just want to pull up the form so you can know what information is going to be asked, so you can have all your documents ready. The 4506T form, that's what allows the government to go in and just verify your tax transcripts. And then they are going to want to see your most recent year filed tax returns. Most people probably don't have 2019 at this point, but if you do, you can submit those or submit your 2018 tax returns. And then they also want to know a schedule of your current liabilities. And one of the main reasons they want to know this is the program is going to help give the business owner funds to cover some of those liabilities. So if you have, loan obligations out there, say a line of credit or a piece of equipment you're paying off, the SBA is going to want to know that so they can factor that into their underwriting to make sure they're giving you enough money to cover those expenses and liabilities that you have outstanding. So include rent expenses on there, utility expenses. Anything that's going to be kind of over operational type expenses is you want to include on that schedule of liabilities. And then a personal financial statement. I know a lot of you may have this done on a bank form. If you apply for the EIDL loan, they're going to want to see it on the SBA form, and the SBA form is that form 413. And one thing about this form that's going to be a little different from maybe a personal financial statement you filled out from a bank before is SBA, anytime you're married, they want this form created jointly, even if your spouse is not involved in the business. So they're definitely going to want it completed jointly and signed jointly. So just make sure that you have that prepared ahead of time. Otherwise, that'll be something that'll get kicked back over to you. And then they may ask for some additional documentation, just depending on how much money you're requesting. And just to give people a heads up, the larger the loan amount, the more documentation they're probably going to ask for. So if you're asking for $500,000 or $1 million, they're probably going to ask for some additional supporting documentation around why you're needing that higher amount. We can head on to the next slide. All right, so now we're going to dig into the Paycheck Protection Program. And Brian, I may just let you kind of start us off on this one, because I know you have been really processing kind of boots on the ground right now, working with small business owners that are getting these in. So why don't you give us a little feedback on kind of how that application process is going right now?
Well, as I mentioned with the EIDL, it certainly started with its fair share of challenges, but as really every hour, it has increasingly gotten easier to navigate through. And I think the biggest challenge for us, Lane, in the beginning was the moving target of what information was needed, what was the proper documentation to have, and then who could be included as part of your payroll calculation. And so, I think what got people excited about this was they heard that this has the potential to be a forgivable loan from the government. So everybody was excited to get in line for it, but maybe didn't totally understand all the specifics with the program itself. And so we were doing a lot of counseling in the beginning about what the program is. And I think you nailed it great earlier. Really, the focus of this is to provide payroll for businesses who have either had stalled revenue or maybe even had to almost completely shut their business down and be able to maintain their payroll through that period of time. And a lot of business owners, they get excited when they hear about a forgivable loan, but have to understand that the proceeds really do need to be used for payroll. So this is a $349 billion program that has been approved through the CARES Act. It is a 100% federally guaranteed loan by the SBA. And as we've discussed, there is the potential for these loans to be forgiven on the backside. And I guess we'll talk a little bit more about that a little bit later. Mike, if you want to go ahead with the slide. So as I discussed, the big question in the beginning was who qualifies for this? And as last week progressed, we understood more and more that initially the focus last Friday, April 3rd, was on businesses with W-2 employees. That was the best way to describe it, and nonprofits. And so the program launched Friday. We began to receive applications for businesses who had W-2 employees and nonprofits, and began to work those applications through the system. Obviously, it depends, like Lane discussed with the EIDL, the loan amount. Depending on the loan amount, you're going to be required to provide an increased documentation. But specifically with Pinnacle, what we're looking for is the SBA's application that we have made accessible in various ways. In addition to that, a calculator that demonstrates how you come up with the calculation of your payroll. And what the government is looking for is your 12-month payroll and taking a monthly average, and a real simple formula is to take your monthly average payroll and multiply that times 2.5. And so what we need is the documentation that supports that. So that would include your 940s and 941 and any additional payroll documentation that would be there. And that calculation helps determine how much you can borrow. And so Lane, do you want to talk a little bit about the forgiveness of the loan?
Yeah, definitely. So I think you nailed it, that most people their interest in this loan is because it does have the ability to be forgiven. And we've gotten a lot of questions because the government, does say that a portion of the loan can be used to cover rent expense and interest expense on loans and utilities. And that is accurate. You can use the loan for some of those expenses, but it has to be 25% or less of the loan can be used on those expenses, and 75% of it definitely has to go towards the payroll cost. And what we've even been told, so this is kind of an ever evolving program. We get more information from SBA just about every day. And so SBA yesterday gave us the marching orders that once we approve the loan, it must be fully funded to the small business owner within 5 days of the bank approving it. So meaning that the bank needs to give the small business owners 100% of the loan proceeds. And then that small business owner has a 2-month window that they must use those funds on payroll related costs. And within that time period, as long as you use 75% of the loan proceeds on payroll costs, then at the end of that period, it can be forgiven by the federal government. And you will come back to the bank with documentation proving that you used it on payroll and used it on some of those other eligible expenses. And we, as the bank, will then submit that to SBA, who will then in turn determine how much of the loan is going to be eligible to be forgiven. And so I think that is a key component for business owners to know, is that they've got to spend this money pretty much right away after they get it. The bank has to give it to you guys within 5 days. We cannot hold on to dispersing it at a later date. And I get that question a lot, especially from our restaurant business owners. They know their doors are going to be closed and they don't know when they're going to reopen. And so that's a hard decision for them to make, to go hire back a bunch of staff that they know will just be sitting at home and will not be able to be in a restaurant doing any sort of work right now. And so they're wanting to know if they can delay and wait to use this money later on in the spring or summer, whenever their doors are open again. And unfortunately, that isn't the intent. The intent that the federal government was looking for is for this money to be spent right now to keep employees being paid while the doors are closed. So in order for it to be forgiven, it does need to be used in a very short window of time. Needs to be used within 2 months, SBA is saying, in order for it to be forgiven. Now, if you hold on to it and you don't use it during that 2 months, it becomes a loan that you pay back to the bank at that point. So that, I think, is a key point for business owners to realize, that it becomes a loan then at 1% interest that you must pay back to the bank. And then it's got to be paid back. You can defer payments for the first 6 months, but after 6 months, you then will owe the bank full principal and interest payments due over an 18-month repayment period. So that's key for business owners to know and realize. And that's why I have been advising some business owners that maybe the EIDL loan is a better fit. If you don't have a lot of payroll costs that you're looking to cover, you may want to consider that program over this program because of the longer repayment period that the EIDL loan provides over the Paycheck Protection Program.
Yeah, and Lane, I think I would add to this, one of the best practices that I've been discussing with clients and people as we've gone through this process is to open a separate bank account for the proceeds of this loan to go into, so that they can very easily monitor the money that they were funded from the government, but then also keep very close tabs as to how they spend the money. Because it's almost going to be like a 2 application process. People will apply for the loan on the front end, and once it's approved and funded, they'll essentially turn right around and apply for forgiveness on the backside. And documentation is key for both of them. And the easy way to do that is to have a bank account that they fund the loan proceeds to, and then can distribute the money from, and keep really easy, close records on exactly how they spend the money.
That is great advice, Brian. So I definitely recommend that as well. SBA is going to require on the back end, like Brian said, we're going to need to match up those payroll records then with how the funds got paid to cover them. So what they're going to want to see is that from the bank account, where you put your PPP loan funds, they're going to want to match that number up with your payroll number. So the better documentation we have of that, it's going to make it easier, and the higher the likelihood is that SBA will agree with our kind of checks and balance system here, and they'll agree that the funds were used appropriately and can be forgiven. And so if you can have one account where you're using those funds from, it will make it easier for the reconciliation on the back end. I think we can head on to the next slide. All right, wow, that was quick. So it looks like we are going to open it up to some question and answer here. And I don't know, Mike, if you have some questions already keyed up for Brian and I.
Yeah, you bet. And we've got a whole bunch of them online already. So for attendees, if you go to the GoToWebinar question section, you can type in your questions. Probably going to be more than we can get to in this time. I will say a bunch of the questions that came in were housekeeping oriented. And so the answer is yes, we're recording this. Everyone is going to, who signed up, whether you made it to today's session or not, is going to get an email with the link to the recording. We're also going to put this recording on our website for anybody to watch on demand after the fact. So no need to take notes. You can always come back to it if you want. All right, so I'm going to try to kind of bucket some of these questions together. And again, there's a few of them in here, and Lane, you hit it pretty good at the end, talking about the timing of this 8 weeks. So if the doors aren't open yet when the loan comes in, can businesses specify or influence when the loan gets approved? Because I know there was a rush, and I'm editorializing here, but I know there was a rush for everybody to try to get a place in line, therefore getting their apps in right away, but knowing full well they're under a shelter order for at least another 30+ days. Is there a way to delay the closing of that loan to start the 8 weeks clock ticking at a later time?
Unfortunately, there's not. I mean, in order for those funds to be held in case that they run out, the bank does have to submit to SBA to go ahead and reserve those funds. And that's kind of what we're doing as a bank. When we submit the loan to SBA, the bank's really approving it. The bank's actually using their funds, but when we send to SBA to get their approval, what that's doing is reserving that guarantee percentage out of that pool of money that Washington has set aside, that $350 billion. So once we do that, that's what SBA is saying. We must fully fund it within 5 days of us doing that. So they want that money out of the bank and in the business owner's hands within 5 days, which starts that clock. And so there's no way to kind of earmark those funds and hold the closing for a later date.
Yeah, and I think that's a conversation that I've had with a lot of business owners, just like we've discussed. There's so many that are almost completely closed, or they just aren't functioning right now, and so they're trying to rationalize and understand how it benefits them to take this money when their doors aren't even open. You know, if they are a retail business or a restaurant or something like that, and they depend on people coming to their place of business and spending money, and people can't do that right now. They're trying to rationalize that. And I think it's back to the beginning that we discussed. The goal of this program is to get money to the employees' hands who have either been laid off or potentially could be laid off or don't have the revenue coming in from the company to continue to pay the employees. It's to get the money in their hands during this lull period where so many businesses are closed or are essentially closed.
Yeah, that's the name of the program, right? Paycheck Protection Program, not Small Business Protection Program, unfortunately for many.
That's right.
Yeah. All right, can you speak more about the calculation? So the handful of questions here. So I think everybody understands 75% of the money must be used for payroll. But what if, I'm just going to use a round number. What if somebody gets a loan for, say, $100,000 and they bring their employees back, but they're using this PPP money to pay those employees, but it just simply doesn't add up to 75% is it a binary thing where either it's all forgiven or none forgiven, or is there a some type of a calculation that, depending on how much you use for payroll, determines how much you're forgiven?
So the SBA hasn't given us specific guidance quite yet on what is going to be forgivable at the end of the day, and if they're under that 75, what that looks like, if they'll then, kind of do it pro rata. So say they use 50% of it on payroll, that 50% would be forgiven, and the rest of it, the remaining 50% turns into a loan. So that is kind of a question that's still out there that SBA has yet to answer. They're working on that right now. They're working on putting the guidelines into place as to what is going to be needed once it comes to us for the forgiveness component. So I think that's real important. And what I'm telling business owners is, because we don't have those guidelines, and because they're saying right now at least 75% of it must be used on payroll to be forgiven, unless you're pretty certain you're going to be able to spend 100% of it on payroll, you need to be comfortable knowing that this could potentially just be a nice low interest rate loan for you that's got to be repaid pretty quickly. And that's just kind of the risk that they need to know going into it, just because we do not have all the details at this point. SBA is literally doing updates daily to us as the bank on kind of how the program is going to function and operate.
So is it fair to say that if you're a business, so the calculation of 2.5 times monthly salary, if you don't think you can spend 2.5 times monthly salary, but you do want some PPP protection in the form of a loan, you should be really doing some hard math on, yes, applying for the loan, but applying for a small enough loan that your 75% will fall into the payroll bucket?
Correct. That's a great point, Mike. You don't have to, say that your, 2.5 times equals out to 100,000, and you're not going to have 100,000 in payroll expense, and you think you're going to be closer to maybe having 50,000 of payroll expense. Well, you can take a lower loan amount. You don't have to take the full 100,000 that you qualified for based off your historic payroll numbers. So if you still want it to be forgiven and you have a good idea of, exactly how many employees you're going to bring back and what that amounts to over the next 8 weeks, then by all means, you can take a lower loan amount to stay within those guidelines.
Very good. So you did mention that the EIDL and PPP are not mutually exclusive. Can you speak more? There's questions about there was early talk the past weeks about EIDL getting rolled into PPP. Can you share more what we do and what we don't know about how it will get rolled in? If it does, will it be part of the 2.5 times payroll calculation, et cetera?
Yeah, no, that is a great question as well. And we don't have all the details quite yet on that, but what we do know is they don't want double dipping. They don't want you to have gotten an EIDL loan that you're using for payroll, and then to get another Paycheck protection loan that you're going to also use for payroll. So they really have said if you've gotten an EIDL loan, or if you are approved for an EIDL loan that you haven't received yet, and it specifically is revolving around payroll, you'll need to use your PPP loan then to pay off the EIDL loan, and then it will still be able to be forgiven. Another thing that you would want to know is if you get that $10,000 advance that can become a $10,000 grant, if you get that as well, your Paycheck protection program, your forgivable amount will be decreased by that $10,000 that you got as your advance that is also a grant that gets forgiven. So that $10,000 will be subtracted from your forgiveness component of the PPP loan as well.
And we're far enough into this process now. I know last Friday people were just still trying to understand the difference of the PPP and the EIDL and which one they should even apply for. But at this point, we have had several people that have applied for the EIDL, even though, like we said earlier, nobody that we're aware of has actually received the funds. There's a spot on the application for the PPP where you do your monthly payroll calculation and multiply it times 2.5 and then add in any proceeds from the EIDL that you would have received. So there's actually a spot on the PPP application for that information to go.
Great. I got another question here about the remaining 25%. So if it's I think we made it clear that 75% needs to be spent on payroll, but are there restrictions on the remaining 25%? Is it only for rent or say mortgage interest, or could it be used for any legitimate business expense?
So it does need to be used on general operating expenses such as rent, lease agreements, your utility bills. It can be used to pay interest on other loans as well, but what they don't want to see is that you're using the PPP loan to potentially pay off, a high interest credit card. You can't pay it off in full. You can make your regular interest payment on it, but you cannot pay it off in full. They don't want to see that you're using it for marketing expenses. They don't want to see that you're using it for, personal items as well. So, no grocery bills or anything like that, office supplies, those sorts of things. They really want it to be just kind of your operating bills that you normally have, such as utilities and rent payments.
Got it. So I'm really curious for your answer on this one, because this is one, as a payroll company, we've been working just day and night on, and there are constant updates from IRS and DOL on this. It's the how are you guys treating the calculation of average wages? So and for people who don't have the background of the question, part of the calculation of the 2.5 times monthly payroll excludes people who make over $100,000. Doesn't exclude their income, but it excludes the portion over 100,000. What goes into that 100,000? Is it just base pay? Is it commissions, bonuses? What about taxes, unemployment insurance, etc.?
Yeah, I know you probably have gotten a lot of these questions lately, as have we, and SBA did come out with some guidance for us yesterday on this, which was helpful because, everybody's payroll probably looks a little bit different, and then everybody's benefits on top of their payroll look a little different. And so, Mike, you talked about how it is capped at 100,000, and SBA did clarify for us that cap of 100,000 is true cash compensation of 100,000, so not including the benefits. So you can then add benefits on top of the $100,000 salary cap. So that was good to know, because that was one big question we had. And then you would include the taxes into the calculation as well. So we are including those taxes. And last week we were excluding them because we read some language where they were saying that they needed to be excluded from SBA, and then SBA came back and said you can include those payroll taxes as well. So I think that's really important for business owners to know, because we were getting a lot of questions when we were excluding them saying, well, then if I bring somebody back, I'm still going to be out of pocket as the business owner if I'm paying them their normal salary, because then I've got to pay the employment taxes on top of it. So we did get some clarification around that and are able to include those into our calculation now. So I hope that answers the question and kind of clears up some of those question marks that we had as well.
Yeah, that's a really important one. As you can imagine, this has been such a frustration for, I would say our clients, but also non-clients, any small business trying to figure this out, because each bank that they may be working with might have their own interpretation, right? And they certainly did, because we were getting requests from clients requiring a report that would calculate in conflicting ways. So yeah. Until this point, we've provided, this isn't a pitch, I'm just explaining for our clients on our call, we've had a CARES specific payroll report that simply provided the data that your lender could then extrapolate their correct information, putting into production. I think it's today or this evening. Will, based on yesterday's SBA's updated guidance, we will actually make the max calculation on the client's behalf in the report. So there's no math to do. So until that SBA clarification, any vendor would have been kind of guessing at the best practice. So that's status of that.
Well, we appreciate you doing that, Mike. And one thing for the business owners to know, and it's not that every bank is going to look at it this way. And Pinnacle definitely, we're wanting to kind of go in and do a deep dive into those payroll numbers, those verifications that you guys are doing as the payroll company. But some of the lenders like Bank of America are just saying, give us your third party vendor, report, and that's all the certification we need. Then the business owner is just going to certify that those numbers are accurate, and then it moves quickly through the process. And so, that one piece of documentation that you can provide may be enough to actually get a small business owner fully approved and closed on their PPP loan without needing to provide any additional information.
Yeah, the goal would be simply provide that with the 940, 941s, and that should be about all you need. But it does kind of beg the next question, because so much of this is really dependent on the lender. And Brian, maybe this is to you. Can you guys speak to, so obviously Assure is doing this in partnership with Pinnacle today, this webinar. We're doing our very best not to make this a sales pitch, but just purely educational information for everyone. But should people be contacting Pinnacle? And if not, why not? And talk through how this could vary on a per lender basis.
Yeah, well, it's a great question, Mike. And in almost every single situation, my response to that question would be absolutely, you should contact Pinnacle. This one is a little bit different because, to your point, every lender's approach, every bank's approach is different with this. So my guidance would be to contact your banker, whoever your banking relationship is with. I would contact your banker and have a conversation about your specific business and all of the potential issues that could come up for you as you go through this process, and just have a conversation so that you can understand what the bank's expectation is of you, their client, and also so that you understand what all the options are for you. So as you can imagine, because lots of banks are navigating this differently, our phone has been very busy for the last week or so, because we've taken a proactive approach, and not to say one way is right or wrong, because other banks have taken sort of a wait and see approach as the information continues to come out. We've just decided to jump in with our clients and decide we're going to try to navigate this together and try to work through the information together. And it's really been received well. And so, just as Lane has communicated, we try to share the information that we have as soon as we get it. And that may mean that we say one thing one day and then more guidance comes out and we're saying something almost completely different the next day, but we're putting that communication out and we're having those ongoing conversations. And so I have had conversations with friends, with other people in our community who aren't getting information from their bank. They aren't getting return phone calls. They're trying to do an online application that doesn't seem to go anywhere. And so what I would say is that we're happy to have a conversation, but to also set the expectation that, in fairness to our existing clients, that we're sort of prioritizing our existing client base as we work through these applications. And we're not opposed to having a conversation about either one of these programs. We're not against having a conversation to offer some guidance. Effective advice that's our brand. And so, I would just set the expectation that we're not open for business for everybody in all of our markets to show up and make applications today, but we're certainly open to having conversations and trying to help you work through it to understand what your situation involves.
Yeah, thanks, Brian. So punchline is, I just know from our work at Assure and also outside of Assure, the banks are overwhelmed with this right now. So definitely you need to get in line with your current banker. So, and this kind of teases up the next another question I've got here. The slide deck that we walked through today talks about, supplying documentation with the application. But what documentation are we referring to? Can you give an idea for what other types of documentation non-Pinnacle lenders might be asking for, so folks can come in prepared to those conversations?
I think you nailed it earlier, Mike. I think your payroll documentation is important, especially the summary pages. Your particular lender may want all the detail for every associate, and that may mean a really large file, but I know in a lot of cases, just a summary that demonstrates each individual's annual income is very helpful. I know for us, the 940s and 941s are really important. It helps us verify the information that the client has used to come up with their calculation, and kind of gives us a checks and balances for that. I think that's really important. And then as we've talked about, there is sort of a guideline or a mark or a cap for people earning over $100,000 in salary. And so just, again, back to those payroll documents, to be able to verify for us how you come up with the people that are earning that money, and what, if any, additional benefits over $100,000 are involved, just to make sure we help you with your calculation. Lane, did that cover most of it? What else would you include?
It does. I mean, I think the other thing, the only other thing SBA has kind of told us that we must verify is we must keep in regulation with the Bank Secrecy Act. And so we do have to, if you're not a current bank client, or whatever bank you're applying at, if you're not a current client, they're going to have to run you through the banking system to verify you are who you say you are, and your business is who they say they are. So getting, the Secretary of State records that your business is in good standing, getting driver's license, social security numbers, things like that, just to make sure that they're meeting their regulatory requirements that are in addition to what the SBA is looking for to validate the payroll.
All right, thanks, guys. I'm going to digress for 1 second. I got a handful of questions here that are Assure specific around, the retention credit, deferral of employer share of Social Security, things like that. What I'll tell you, I'm not intentionally avoiding your questions, so I want to let you guys know that we are neck deep working this issue directly and through consortium with other payroll providers, with IRS. As you can imagine, these laws are giant and sweeping. They get passed, and we all see it on the news. But then it's up to the regulatory bodies to actually figure out how the heck they're going to implement. And it's been about 10 days. And so we think we're real close on having final answers. Once we have final answers, then we can then put that into the product, and we'll share that with you. So we think we're real close. It'll probably be yet this week that you can look for guidance from us, and you just look through your normal channels, contacting your customer support rep, and on our website. Interesting question. I've seen this one before. This is probably for you, Lane. So this is a company that does business in the US. They have US employees, but their parent company is UK. And so the forms ask for an EIN, and is there a way that they can participate still, if they don't have an EIN because they're UK based? Can they participate and help pay to bring back some employees?
That is a great question, and unfortunately the answer is no. So it does have to be a US based company, and controlled. I think that's a key question too. The SBA gets at that on one of the application questions of having to list ownership, and anybody that has a controlling or 20% more ownership in the business. And so it kind of works both ways. So even if you're a US held company, but all your employees are located somewhere else, then those employees don't qualify. And on the flip side, if you operate and do business in the US, but the company is headquartered outside of the US, in the UK in this instance, unfortunately, those companies are ineligible from this particular program.
Yeah. Unfortunate, but appreciate that answer. So apparently shared, I'm highly empathetic with this person and their question because it came in at 1:24 at about the time the slides were wrapping up. So I'm guessing you had an impact, Lane and Brian. But the question is, what if a company has already applied for PPP but now realizes EIDL is better? Is there a way to unapply for PPP or just simply not accept if it's approved?
No, that's a great question. And Brian, I'm sure you've gotten some of this. You do not have to accept either loan program. So it works both ways. So if you've applied for EIDL and realized PPP is better, you don't have to accept that loan at the end of the day. And same thing with the PPP. If you've already applied at a bank for the Paycheck protection loan and you realize it's probably not going to be a great fit for you or it won't be forgivable, you just don't have to close it and do it with the bank. Now, if you've already closed it and taken the money, then it is a loan at that point that you've already received, and you can, pay it back quickly if you've realized you don't need it. But you don't have to close on it if you've already applied and are still going just through that application process.
Now, what
and I would say, Mike, that it probably depends on the bank. I know that just in this very short period of time, I've already had a couple of the PPP loans withdrawn from our system. And so I would say that if they do make the determination that the EIDL is the better route and they want to just stop the PPP process, to contact their bank and make that request. And if it can be withdrawn, then that's great. And if not, to Lane's point, they just don't have to accept the loan.
So I've got a question in here, and I just know this personally also. What about that sequence of timing? So the PPP loans this person has already been told by the bank that they were approved, and they're waiting word from the bank on timing for funding. I think, Lane, maybe you could clear that up. So maybe it's within the next 5 days. But they also a couple weeks ago applied for EIDL and have heard nothing. So is there any recourse if they get approved for EIDL for an amount that makes sense that they would have preferred that? Is there any guidance you can give? But they're already, because it's two separate bodies, right? It's the EIDL is SBA direct versus PPP is direct with their lender.
Correct. Yes. That's a great question, and that's going to fall into kind of a gray area of those EIDL loans are taking a much longer time period to get approved because they're all going through SBA, which is one entity. And up until this point, they probably only had a handful of a couple of hundred employees processing current SBA loans. And now I've heard we actually have a staffing company here in Nashville that's helping SBA staff up, and they're hiring 750 processors across the country to work on these loans right now. So hopefully in the near future it'll start moving a little faster, but right now it's a very cumbersome, long process of about 3 to 4 weeks before you even hear back from SBA. And the Paycheck Protection Loan Program, really it should be a matter of days of once you apply at the bank, get approved, and get the funding in hand. So it's a much faster turnaround time, and that money, can get to work in your small business a lot faster through the Paycheck Protection Program. So if they realize they got the Paycheck Protection Loan and it's not going to be forgivable, and they really want to use the EIDL loan instead, then they could just use part of their EIDL loan to pay off that Paycheck Protection Loan. And I believe that would be okay. SBA has given more instances of the reverse happening, of using the PPP loan to pay off EIDL so that's forgivable, and they haven't really addressed the opposite scenario. But since the EIDL loan does come directly from SBA, you would just probably want to talk to your SBA rep who's helping you through that process and let them know, hey, we got a PPP loan. We're realizing it's not going to be used to where it would be forgiven, and we'd like to use the EIDL loan to pay it off once we do get it, and just make sure that that's acceptable for them. That's an acceptable use of that loan. And if it is, that's probably what I would recommend in those circumstances, because it could be, a month from now before people are even hearing back from SBA on the status of their EIDL loan.
Right. Okay. Here's a tough one, and maybe a bit wonky. So I'll read a specific question, and then I'll kind of double down.
This one's for Brian then.
Okay.
Fantastic.
Being self-employed, can my income or draw be included in the payroll amount? And so my wonky additive there is, I'm assuming there's a difference whether you W-2 yourself, as say, for example, you're the manager and you get a paycheck as part of your LLC, versus you're a sole proprietor and you just take a draw. Can you speak to that?
Brian,
Mike,
if you don't want to speak to that, I definitely have an answer for that. It may not be the right one, but.
Well, yeah, I mean, you and I both have kind of been entertaining that type of question for probably the last week now, as people have tried to understand what they can and can't include in their payroll. And, I think Mike did a pretty good job of defining it. Really, this first round is W-2. So if you're paying yourself a regular salary as the business owner, then that can be included. What the guidance has been to this point is draws need to wait until this coming Friday, the 10th, and that will be handled separately. Lane, would you add to that?
Yeah, so that is how we're handling it here at Pinnacle, because the SBA has left this area rather vague as far as if you're a business owner that does have employees and you also pay yourself through a draw, should you include that draw in with your calculation. I'm getting this a lot from law firms. So law firms can have, hundreds of partners that are paid out through partner distributions. Do you include those partner distributions in with your loan as the payroll, or do you wait and make each one of the partners apply individually as a self-employed when those applications become available on the 10th? I don't, and just my opinion of knowing SBA, I don't feel like it was their intent that businesses that operate like that do have payroll in addition to an owner draw, that they have to apply separately, but they haven't done a good job of clarifying that. That's one of the many questions we have out to them that we're waiting for them to give further guidance on. And so since we don't have a clear-cut answer on that, right now we're advising people to apply separately for their owner draws when the self-employment applications come out and are available on the 10th. But they may come back out this week and say, oh, no, that wasn't, our intent. If you're a small business owner that say has 100 employees and also you pay yourself a draw, by all means include your owner's draw in with your salary. Don't wait and apply as a self-employed for your owner's draw on the 10th. But we don't have the guidance for that, so we're taking the conservative approach. And the main reason we're doing that, that's not to say other lenders may be looking at it differently. The main reason we're doing that is because it's our intent to protect that forgivable component. And so we want to make sure that we're maximizing the amount of the loan that can be forgiven. And so the risk we run if it was calculated incorrectly and the payroll costs were high is that portion would not be forgivable at the end of the day.
And so I would say, to add to that, Mike, the other piece of it, to Lane's point, we have taken a bit of a conservative approach with really this entire process, but we've also been flexible as information has come out, as further guidance has come out. We have made adjustments on the fly to the loan amounts of our clients at whatever stage they are in the process. We've gone in and made those adjustments. And so we've just tried to be flexible as we work through this, understanding that it is a bit of a moving target.
Very good. You know what? We got 3 minutes left. There are so many good questions here. We're never going to get to all of them. I'm going to pick one that I think comes from a really good human. There's a lot of businesses that just by the nature of their business model live hand to mouth. And as soon as the shelter order came, they had to close their doors and lay everyone off. There are others with some type of residual revenue or well-heeled owners who continue to pay their people just to try to do the right thing. What about those who have already paid their staff some money? And I'm assuming the answer is going to tie to the 8-week clock ticking from approval date, but maybe Lane, you want to take that one?
No, that's a great question, and we have gotten that. You're right. You do have those business owners. I talked with a dentist yesterday that's the scenario he's in. His doors have been closed for 3 weeks now, and he's continued to, not take a paycheck himself so he can continue to pay his staff. And he doesn't know how long he can keep that up. And he wanted to know if he could use this money retroactively since he has already been paying their salaries over the last few months. And unfortunately, that's not the way this program's being written. So it does have to be used on, payroll expenses during that 8-week look back period, as far as what's being defined right now. Now, that's not to say the SBA couldn't come out and change that so that in order to allow for more loans to be forgiven, you could go back and say, well, I've kept my employees over the past 3 weeks paid. And so you're just essentially reimbursing yourself for having paid them. But I do feel like that's unlikely, just as a 20-year veteran of doing SBA loans. That's not how SBA would look at it in their other loan programs. They don't ever want an owner to go back and be able to take loan proceeds to get reimbursed for things they spent money on in the past. So I don't think that that's going to be their answer to it, but I don't know. They've done a lot of things different as far as this program goes that historically have never been done under SBA before, such as financing nonprofits and churches as part of this as well. So that's a good question as it is right now. I don't think they can use it on, past payroll. It's got to be used towards that payroll during the next 8 weeks.
I would say, Mike, in addition to that, I know one question that's come up a lot is, to your point, if things were tight in the beginning and then all of a sudden nobody's coming in, so they have to close their doors and lay people off, there is the ability for them to go and bring those people back once they understand they've been approved and can fund the loan, that they can bring those back and still consider it forgiven, even if there is a window of time where they did have to lay their workforce off, or even a portion of their workforce off. As long as they do bring them back and pay them, then it is a forgivable loan.
Yeah, you know what, and that just tees up a whole bunch of other questions, like should I bring people back or let them make more in unemployment? But we're out of time, guys. This has been so helpful. I know there's probably more. The more questions we ask, the more we know how much we don't know. And so there's going to be a lot to unfold, and maybe we'll have a follow-up on this. I just want to thank Lane and Brian for your knowledge and your experience and your wisdom here. I think this is super valuable. Just a reminder to everybody, we are recording this, and we're going to send the recording to everyone. It's going to be available on our website. So getting some IMs and some emails from a few folks asking that. So yes, this is to share with anybody for any reason. So let's be thankful that we all have our health on this call, and say a prayer for those who don't, and thank goodness for those people who are in a position to keep paying their employees even without the PPP funding. So with that, I just want to thank everybody and have a great day.
Thanks, Mike.
Bye.